Second quarter, once the numbers come out, it's going to show that we're in a recession. I think a lot of people feel it. We look around, the economy is contracting a little bit, and what's going to happen is when that is confirmed, then things are going to get really challenging because consumer sentiment, it really is one of the most important components to our economy. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and this video I'm going to be talking to you about something that's not very fun. It's something that everybody's going to get impacted by in a negative way, myself included, and that is the recession is here. It started. How are we going to be impacted by it, and what can you do about it specifically, and what are the moving parts about this recession that you need to consider to make sure that you're protected and available and able to take advantage of opportunity that are created in this recession. So what I want to do right out of the gate is just kind of talk about this. Like, listen, the first quarter we had contraction, right? So what I know and what I've seen, so I don't know this because I haven't seen the numbers specifically because they haven't come out yet, but my guess is the second quarter, once the numbers come out, it's going to show that we're in a recession. I think a lot of people feel it. We look around, the economy is contracting a little bit, and what's going to happen is when that is confirmed, then things are going to get really challenging because consumer sentiment, it really is one of the most important components to our economy, right? Like, consumer confidence is a big driver in the economy, and it doesn't take much for things to just kind of spiral out of control, right? Like, as far as, like, look at what happened in 2008. It was just a couple things. It was a 4% contraction in the economy with too much leverage with the wrong banks, and because a couple things went really bad, it was this snowball, this domino effect of a lot of negative consequences. Now, I understand there were a lot of people over leveraged, and when the economy is that way, it gets really nasty. Now, here's the bottom line, though. We have a lot of leverage going on right now, too, and consumer confidence is what's driving our ability to keep that going. Now, if you think about it, it makes no sense. Why do we have so much consumer confidence, right? Like, we're $30 trillion in debt, interest rates are going up, inflation, Lord only knows what's going to happen with that. We'll find out in 8-9 days, based on when I'm filming this video of what inflation is going to look like when the new CPI number comes out, and we'll see if it's going to kind of bounce back up or continue the downward trend. But the bottom line is that this recession, I think we're in a recession right now. I think most people are feeling it. I think when you go to the gas pump, and I think when you go to Costco or the grocery store, most people are feeling it. Now, I don't know about you, but most Americans are less than $400 a month away from insolvency. I can speak just for myself when I talk about when I go to the gas station, when I go to Costco, I'm spending more than $400 a month more on gas and groceries alone. That has nothing to do with anything else, whether it's my house oil, fuel, electric bill, anything of that nature, right? So when you look at all the moving parts, the people that were just on the borderline of insolvency with this inflationary situation, all their expendable income just dries up, it evaporates, it gets eviscerated because of inflation. It just eats into it because wage growth hasn't kept up with that. So here's what I think is going to happen. And once again, I have no crystal ball here, but this is just kind of how I see things playing out, and I just want to share it with you so you can prepare for it, and you can really consider this, right? Like, consider these variables because it's going to have an impact on every single person in this country, I think, unless you're the ultra elite, ultra wealthy, right? And so this is the way I look at it. We're going to go into this position where a recession is going to happen. The recession is going to lead to this consumer sentiment spiral, downward spiral, and that is going to, a lot of the demand in the housing is going to evaporate really, really quickly, right? So demand is going to go down. The inventory cycle is going to level out, right? Like, people think that the real estate market is super insulated because inventory is super low, demand is still at normal levels, right? So as inventory goes up and demand comes down, they'll kind of meet in the middle, and when that happens, housing prices will be negatively impacted. It's one of the reasons that I say real estate will be one of the last things to drop, is because inventory is so low. However, during that time, the stock market will go down. People will get hurt. People will lose their jobs. Unemployment rates will go up. We're already seeing these things happen in the market, right? Like, this is already going on. Now, this is a potential, right? If the recession is confirmed, what's going to happen is as soon as it's confirmed, things are going to get really bad. Because the federal funds rate is going to, I shouldn't say the federal funds rate. Jerome Powell, the chairman of the Fed, is going to have a choice to make with the federal funds rate. At that moment in time, as soon as this recession is confirmed, he's going to have to make a decision. Do we increase the federal funds rate and keep doing what we need to do to control inflation? Or do we reduce the federal funds rate and fight unemployment? Do we fight the recession? You can't do both things at the same time. These are two opposing forces and it's a conflict of interest. And this is why we're in such a rough spot right now, because unfortunately, Jerome Powell is damned if he does and damned if he doesn't, right? If he raises interest rates, he's going to push us into a recession, which, by the way, I think is the way we need to go. We need to flush out bad debt. We need to, have some austerity, and we need to bring in and get to a more sound economic basis that we can build our economy back on a solid foundation, right? Because right now it's just printed money. It's just, we've been living in this world where the stock market has gone up, the real estate market's gone up, unemployment is low. I don't think it's as low as everybody wants to think. It's just the labor participation rate because people have aged out or timed out of unemployment. But all of this growth has happened when production has gone down. Supply chains have been disrupted, all these different things. But what I think is going to happen is Jerome Powell is going to have this choice to make, and he's going to say, do I raise rates and fight inflation, or which is going to make it worse, which I think is the right thing to do. I don't think he's going to do that. What I think he's going to do is retrace. I think he's going to retract, and he's going to focus more on the economy because that's a political thing to do. And unfortunately, we're coming into an election cycle, and that's just kind of how I see it playing out. So I think he's going to retrace. And when he retraces, what's going to happen is that's going to drive inflation up. Now, it's going to kick the can down the road a little bit, but if inflation keeps going up because interest rates go down, that makes things cheaper. It puts more money into the economy. It makes it a little better for people on a short-term basis. But then what's going to happen is inflation's going to keep continuing to go up, and we're going to have stagflation. Stagflation happens when inflation goes up faster than wage growth. Because listen, inflation isn't bad. If we have 10% inflation and 10% wage growth, really all it is money is just a tool, right? It's not a matter of how much money you have. It's a matter of what does that money buy for you. That's the component that matters the most. It's not, do I have $1 million? It's what does that $1 million buy for me? It's not, do I have $100,000 a year of income? It's what quality of lifestyle does that $100,000 of income create for me and my family? That's what matters. So if I'm making $100,000 and then we have 10% inflation, so and that $100,000 creates a certain life, that means I need to make $110,000 to keep that same lifestyle. That's what 10% inflation does. So if I have wage growth of 10% and I keep up with that, then it's no harm, no foul. Now, I don't think that's a great way to do it because there's a lot of manipulation that goes into that. But from a mathematical perspective and a quality of life perspective, that's what matters. Now, on the back end of this, what's happening is inflation is going up and wage growth is not. We've got decades of inflation outpacing wage growth. And that's why we're reaching in this position that we're in right now. And unfortunately, because of the way that we handled the money printing during COVID, the way that we handled giving out free checks, money printing doesn't cause inflation. Money printing going into consumers' hands that gets spent and the velocity of that money hitting the economy, that's what causes inflation. And that's why we are where we are now. When I spoke with Harry Dent, he kind of thinks that, there's a diminishing return on all the spending and all the money printing that's happening right now. So the government's kind of in this position. They could keep printing money. It's just going to cause inflation and we're going to have stagflation, or we're going to hit a recession through proper monetary policy. So what's going to happen right now is we're either in a recession right now and it's happening and we're actually in it and it's going to be confirmed, and that's going to cause consumer sentiment to spiral downwards, which is going to have a snowball effect, and it's, things are going to kind of drop off a cliff a little bit, right? Or when that happens, they're going to fight it. They're going to reduce rates. We're going to cause inflation that'll kick the can down the road. But then we're going to hit stagflation and almost like an inflationary recession that's going to be caused. And that is worse because it's harder to pull out of that, right? And it'll take longer to recover from that sort of recession. There's nothing bad. Listen, if we go through a recession immediately, what you need to do is you need to make sure you have as much liquid, accessible capital that's guaranteed that you cannot lose get money out of the markets, get it in safe, liquid, accessible accounts that you have access to, because when things go down, you need to be prepared for the sale of a lifetime that is going to be coming in this environment. Now, I'm not sitting here to fearmonger. I'm not sitting here to, just scare the crap out of you. That is not the point of this at all. What I'm saying is I'm a big believer. I look at what's the upside, what's the downside, can I live with the downside? Now, having my money in the markets and having my money exposed in all these different areas, if the market takes a tank and takes a dive, I know that that's going to have a massive negative impact on me. I look at it, the upside potential from where we are now is very marginal compared to the downside potential. So I want to take a lot of the risk off the table. I want to get that money protected, because I know if when the downslide happens, I've got liquid accessible capital to be able to take advantage of that opportunity when it presents itself. And those are the people. That's why Warren Buffett, Bill Gates, Elon Musk, Jeff Bezos, they all just literally doubled their wealth at the beginning of COVID, because the market tanked, the rest of the world suffered, but because they were liquid, because they had reserves, because they could take advantage of those opportunities, they were able to take advantage of things after everything dropped 35%, and they were able to buy at massive discounted rates. And then when the market bounced back up, they obviously rode that wave, and here we are. And so right now, that's what I would say to you, is if you want to prepare for this inflationary time, you need to prepare for the recession that's coming, and you need to prepare to make sure that you're protected one way or the other. Nobody knows. This is one of the things. I went to a conference, it was called Market Disruptors Live, about a month ago. One of the things, there were 16 speakers that spoke. There were some people that were big proponents that inflation was going to happen. There were some proponents that thought that deflation was going to happen. So what I got out of that conference and out of my conversations with the speakers, and I've had a couple of them on the channel, I've got more coming on, so make sure you subscribe, hit the bell, that way you're notified when those videos go live, and I got a couple of them coming in the next week or two. And so what I got out of that is we need to be prepared for both. So if your financial strategy doesn't have you prepared for inflation and deflation, and doesn't have you liquid right now and able to take advantage of opportunity when it presents itself to you, then you're making a mistake. Just setting it and forgetting it is not a strategy in today's environment. I know that's what most financial planners tell you to do, but it's gonna bite you if that's what you do, in my opinion. Now, obviously, I would say don't take this as personal financial advice. You gotta know your situation. You gotta know your risk tolerance. You gotta know what your objectives are, and you gotta make sure that what you're doing is in alignment with what your objectives are to be able to get there. And so that's all I can say with that. So if you have any questions, comment in the comment section below. If you haven't already, hit the like button. Make sure you subscribe. Hit the bell, that way you get notified every time I launch a new video. As always, I will do my best to engage with every single comment. Reach out if you need anything. If you want to talk to one of our coaches, click on the link in the description below as well. Set up your free clarity call. No pressure. It literally is about just serving you and helping you get more clarity on how to implement the things that I'm talking about right now. So that's it. Have a blessed, inspirational day. We'll talk soon. See ya.